I think the other, kind of noteworthy data point from our survey was that we always ask, are you currently hiring full-time or part-time employees? And that number for the first time really took a tick down. So it's only half, 50% on the dot, say they are currently hiring full-time, part-time employees.
Welcome to Paychex Thrive, a business podcast where you'll hear timely insights to help you navigate marketplace dynamics and propel your business forward. Here's your host, Gene Marks.
Hey everybody, it's Gene Marks and welcome back to another episode of the Paychex Thrive podcast. Thank you so much for being with us and watching us or listening to us, however you're getting this information. We have back with us Joe Wall, a longtime friend of the podcast, who is a managing director of government affairs at Goldman Sachs. Joe also runs the 10,000 Small Business Program that Goldman Sachs has been doing for a number of years. It's an awesome program that has helped countless small business owners learn how to run businesses and get their feet on the ground and even grow their businesses as well. So, Joe, first of all, thanks again for joining us. For those that don't know you or of the 10,000 Small Business Program, talk to us a little bit about what the program is all about.
Sure. And thank you, Gene, for having me on again. So just by way of background, 10,000 Small Businesses was launched a little over 13 years ago. And it is probably best described as sort of like a mini MBA curriculum that is taught at community colleges across the country. It's about roughly 100 hours of coursework. So it's a big commitment for the business owners and is taught over the course of a few months. And so it's a rather intensive curriculum. And the end goal, which I think just about every business owner I speak with finds hugely beneficial, is they have to come up with a growth plan for their business. So unlike when you go to business school and you're studying a McDonald's or an Under Armour, you name the company, and you're analyzing them instead of analyzing another business, you're very introspective and analyzing yourself. And so we obviously measure the businesses after 6 months, after 18 months, after 30 months. And, we've seen really good success just in terms of job growth, revenue growth. And, now we have, 13 years later, about just over 14,000 businesses across all 50 states that have completed the program. We actually just launched in the last couple of months a rural component to the program. And so we launched in Bismarck, North Dakota a couple of months ago, and we actually just launched in Arkansas this past Friday. But we'll be expanding in addition to those two states to about 18 other rural communities over the course of the next 5 years and investing, roughly $100 million of our program into those rural areas that are often underserved.
Okay, so we're going to get to your press release in a minute because we are going to talk about small business environment. But I got to make sure that I'm clear on some of the things about this program because it's 13 years that you guys have been doing this. Goldman Sachs is an investment banking firm, and I think at Goldman Sachs, I think of you're doing deals with some of the largest companies in the world, not necessarily mom and pop small businesses. And Joe, I talked to so many other brands and corporations that they do little programs or campaigns to help small businesses. It turns out to be nothing more than sort of a marketing thing, and they don't last very long. This is 13 years you guys have been doing this, tens of thousands of businesses through here. Why? Why is this just a philanthropic, exercise for Goldman Sachs, or is there another reason why the company is so committed to this program?
Well, I think, when the firm, and this is, this predates me, but when the firm was thinking about, a way to give back to the community, a way to engage in the community, I think they realized that small businesses are just, are often, in fact, in most communities, I mean, I'm from Omaha, Nebraska, and, Omaha is much like a lot of Midwestern communities, small businesses are kind of the core. Sure. And to that regard, right there, they are not only serving the community from a commercial perspective, but they're also sponsoring the Little League team and are, giving the teenagers in the community a chance at their first job. And so they give back so much more than just the commercial aspect of what they're selling. Right. And so I think we realized that in order to really make a material difference to the economy, this was a really thoughtful and comprehensive way to do so. Yeah, what differentiates our program from a lot of the others, right, is that it is like a tangible resource, and that you're getting a core curriculum, but then you're also part of what is a pretty powerful alumni community.
Right.
We've done a couple of big kind of national summits. We did one in 2018, one last summer, where, in both instances, we had over 2,000, small business owners from just about all 50 states come to DC. And just sort of that organic nature of the community and the networking component that comes with that is also incredibly powerful. I think, roughly about 86% of the businesses that go through the program end up doing business with at least one other graduate of the program. And so just that sense of community, and then the alumni engagement component is also, I think, something that makes it, a little bit more unique and different than others.
And I want to point out as well that whereas a lot of companies, they do things for startups and freelancers and entrepreneurs, which is great and all of that. This is a program that's really kind of directed at, more established businesses. I mean, when I mean more established, I mean, they might have been around for a little bit. In fact, that might even be a criteria to get into the program, right? I mean,
correct.
Your goal is to help them grow, not to start
Yes.
up from scratch, right?
Correct. Yeah, it's exactly right. In terms of the application, you have to be an existing small business, been in business for a couple of years, have more than one employee, and meet certain revenue and other types of benchmarks. And it's a comprehensive application process. There's kind of 3 stages to the interview process to get into class, and so it's something that we take seriously, but also our academic partner, Babson College, takes very seriously. And I think that's, it's also what's made the program special. We're also very proud. We have a very high graduation rate. 98% of businesses that enter the program graduate. And so we also want to get a sense for how committed the business owners are, because it is a big time. Yeah. It's a big time commitment. And we realize, business owners have their business, they have families, they've got kids, they've got a lot of things tugging at their time. And this is a real commitment. So that's part of the application process, is just making sure that this is a good fit for them at this point in their lives. And maybe it's not now, maybe it's 3 months from now, when, when their wedding is passed or they have some big life event that's complicating things.
Yeah, and I got to imagine, I mean, you'll have challenges, I'm sure. I mean, you said you've expanded to rural areas and are going to continue to do that. I mean, those guys are busy, man, during the day. I mean,
Yeah.
they're rural and ag businesses, businesses in rural parts of the country, coming from Omaha and, the outskirts, once you get 10, 15 miles outside of the city, it's, it's a challenge and a struggle. And to pull yourself away to go to these classes and commit to this and prepare and, attend the events and all that, it's a big commitment that people have to sign up for.
No doubt. Yeah, it is a huge commitment, but I think most of them, almost all of them, would say, gosh, it was well worth it. And they get, it's just getting to know other businesses. I think what we have found, right, is that most of these businesses, when it comes to talking about, some of the difficult challenges they face in the business, don't feel like they can talk that with their fellow, colleagues at work or their families, even in some instances. And so just having this community in this group in their class that they feel like they can talk about some of the more, challenging things, the more uncomfortable things that they may not otherwise be comfortable talking with others about is, it can become sort of a therapeutic session in some respects.
Yeah, it's more power to you. I think it's great. It is really great. And again, it's a 13 years in, and I'm sure many more years to go. So it's just an impressive program. All right. So as part of what you do, and as part of what the 10,000 Small Business is about, you guys do studies and research and surveys in the small business community. And an important one just came out, the end of October, where you surveyed, I think, more than 1,200 small businesses and asked them about, the credit environment. And I was wondering if you can talk a little bit about, the findings of that survey.
Yeah. So we surveyed, I think, October 9th through 12th, kind of the front half of October, and just released it in late October. And, what we found, and we really kind of tried to dive deep into the capital space, just given that is, particularly in this environment with interest rates and banks and the aftermath of, what occurred in the spring with SVB and Signature Bank, have definitely tightened a little bit. We wanted to get kind of a real-time assessment of the capital environment. So, what we asked a variety of different questions. I'll just kind of give a top line overview. So only 29% of small businesses say they can currently afford to take out a loan, just given the interest rates and what they're experiencing. And if, from their perspective, if access to capital, continues to tighten, 85% say it's going to impact their growth forecast. In terms of what that can mean, 2/3 say they would halt expansion plans. 42% say they may have to lay off employees or stop hiring. 21% say they may have to close their business. What's kind of, I think, noteworthy, just to paint the picture of how tough it is right now, we asked the small business owners, thinking back to the last 4 years, 2020, 2021, 2022, and of course this year, 2023, which has been the most difficult for your business. And about a third, 31% say this year. 37% said 2020, which of course was the height of the pandemic. We also asked, just sort of diving deep into kind of the fundamentals, 33% have applied for a loan or line of credit within the last year. And we then asked, okay, well, did you get full funding, partial funding, no funding? 41% of those that applied got full funding.
Right.
But if you look a layer deeper and look at Black business owners, for example, Black business owners applied at a much higher rate. 43% sought capital in the last year, and only 26% of them received full funding, right? So there's a real disparity that we're seeing just in terms of the capital space. We also asked a question which we have not asked before, which was, where did you seek capital from? And they could have selected multiple, right? Because some of them are applying from a variety of different sources. But 56% said small regional banks, 43% large or national banks, think of Citi, Bank of America, et cetera. 27% said online lender, 17% said a finance company, 15% credit union, and 13% CDFI. The other thing we asked is, do you have an existing loan? About 2/3 of businesses have an outstanding loan or line of credit. 35% of those loans are variable interest rates, and about just over 60% are fixed. So that was kind of I would say the capital lens right now in terms of how small business owners are feeling.
So just to back up the data that you had. So I wrote a piece in The Hill. It was the end of August, so it was a couple of months ago. But if you go onto the St. Louis Federal Reserve site, which it's called FRED, it has like this unlimited amount of statistical data that you can query on yourself, build your own graphs and charts. Just to complement what you have said. Now this is through the end of August, and your survey happened in October. But I found in one chart that, according to the Federal Reserve, 49% of banks were saying that they have tightened their lending to small businesses. 49% compared to 22% just a year ago. I'm looking at the article that I wrote right now. Banks are also they have tightened down credit card loans as well, and we know that credit card financing is a very popular way to manage your cash, in a business. And then finally, the commercial and industrial loans, Joe, they've been trending down like over the past 6 months. And that's not just small businesses, but that's also, big businesses as well.
Sure.
All of this is the impact of increased interest rates. And to me, we live in a capitalist economy. And when I see that capital is, there's less of a demand for capital, it concerns me about the future. And whether or not that means potential recession or anything like that. What are your thoughts on all of that data as well?
Well, I think you're absolutely right. Whether it's the St. Louis Fed's data or other kind of independent data, I think it's all kind of painting the same picture. And I would say, one thing in particular, we just launched an advocacy campaign around this issue, and it's a bit in the weeds, but I think for the small business community, it could be quite impactful. So, by way of background, the Basel, BASEL, not Basel, committee, which is the international sort of capital standard committee, and this is sort of the final layer of, it's called the Basel III Endgame. Right. But they proposed raising capital standards for banks.
Right.
And then the Federal Reserve in late July kind of stamped their proposal and even kind of, intensified it, gold plated it, if you will. And so what this would mean is for the top 27 US banks, they would be required to carry roughly an additional 20% of capital.
Right.
So one of our banking peers, their CEO said the easy way to think about this is for every 1% in capital extra we have to hold, that's 150 million in capital that's not going to go out the door.
Right.
So you times that by 20, that's 3 billion just from one institution that's, going to be kind of locked down.
Right.
So we're very worried about in a time where, credit is tight, that then layering on these new, capital requirements on banks is going to have, a real negative impact on lending to the small business community. And so this is, we just launched a campaign last week, which is branded "Tell the Fed to Stop the Squeeze on Small Businesses." That it's including digital ads, advertisements, and then we're also, going to submit a formal comment letter to the Federal Reserve from our small business community. But it's one of those issues which, we always, people always say, right, there's a lot of things that happen in DC that a lot, the average person has no idea is going to have an impact on them or their business is going to have.
Yep.
And this is one of those kind of somewhat antiquated issues, right, that is for sure difficult to understand and digest, but is going to have sort of real life implications, not only small businesses, but also consumers. If you're trying to get a mortgage or if you're trying to take out, just a personal loan, there's going to be real consequences to this.
It's funny, I always like to look at both sides of an issue, and I kind of get it. I mean, the 2008 to 2010 banking crisis it's still relatively fresh. I know that was like 13 years ago, but it's for a lot of people, there's a lot of memories of it. So I get it that the government wants to say, listen, we need to make sure there is enough reserves out there. We don't want that happening again. We want to make sure there's stability, but there is a balance, and what you're exactly right. These requirements would make banks hold way more money in capital. And the first people that are going to suffer will be smaller companies, particularly those with less of a credit history or can't afford. The other thing that I'm seeing, and I don't know if you're seeing the same thing, is among my clients, because interest rates are as high as they are right now. I mean, they're 8.5% is the prime rate on average. Most of my clients are not paying, 1, 2, 3 points above that, depending on their credit situation. So, a lot of banks are revisiting the financings that are being asked for that they're doing with some of my clients, and now saying like, do these guys have the ability to pay this stuff back? Because interest rates have gone up like 3 times what it was a year and a half ago, and they're pulled back credit.
Sure.
And I don't know if you're seeing the same thing.
Yeah, 100%. Yeah, 100%. To be honest, I mean, some of our small businesses that I would say are on the high end of successful and growing, and even so, and I'm just like taken aback. They are struggling mightily to access credit, and where they are able, it's with an interest rate that it just doesn't even make sense for them, right? It's 100% prohibitive. So, I think that's what the picture you painted is absolutely accurate.
So what do we do? I mean, as business owners, I was just talking to somebody this morning about this very issue. And I was trying to remember back when I was a kid. I don't know how old you are, but like when I was a kid, it was like in the late 70s and 80s. I was still like in high school. But I kind of remember when interest rates were like 18% or something, I mean, more than twice what they are today. And my recollection is, and this is all anecdotal, is that because my client was my father was a CPA, so we had his clients. The businesses they hobbled along. They still moved. They just didn't grow. I mean, they just weathered the storm as it was for a number of years until interest rates came back down to normal. And do you think that's what we're looking at now with a lot of your participants in the 10,000 small business program? Like because rates are as high as they are and credit is being restricted as it is, that we're looking at a couple of years of businesses, frankly, weathering the storm as opposed to growing for the most part?
Yeah, I mean, it's a great question. I don't pretend to be an economist by any means. I mean, we had really good GDP numbers, right? Yeah. Last week that came out. I think there's kind of mixed views on, I think the consensus is that the Fed stays high longer, meaning, but they don't probably hike, but they just, interest rates stay where they are for a little bit longer than maybe folks had hoped for or anticipated. But I don't, to your point, right, I don't think things are necessarily going to, from an interest rate perspective, improve in the near term. And so for a lot of businesses, I think they've just got to, try their best to kind of weather the current environment, and just have to prepare for the fact that things may not get better. Hopefully they don't get worse,
right? But
we may just be kind of in this, in a similar period where we are today, a year from now. But it's a lot can happen between now and next November. That's for sure.
Yeah, that is true. And this doesn't it doesn't preclude people from making investments. I mean,
No.
right? I mean, return on investment is still return on investment if you can prove it, right?
Sure, absolutely. Yeah, I think it's just for the businesses. I think it's just and it's time flies, right? We all forget, but I mean, just the fact that they've had to weather a kind of a once in a lifetime pandemic. Then, inflationary pressures unlike, anyone has really seen in their lifetime. And now the interest rate climate the way it is. So it's a lot, right? When you sort of just take the cumulative impact of everything that's happened. But that said, right, if you're still around today and still doing pretty well, it's pretty remarkable, right? I mean, the level of stamina some of these businesses have is nothing short of remarkable, right? I mean, they're just incredibly resilient.
They really are, and they keep coming.
So that's what makes them special. We've seen a lot of big businesses fall during this time too, but a lot of small businesses, just given their ingenuity and grit, they find a way. So
you're a corporate guy. You've been with Goldman Sachs how many years now?
Almost 14.
Wow.
Long time. Yeah.
That's like a lifetime. Nobody has had a job for 14 years. And where were you before Goldman Sachs, if I can ask?
So of course, I worked at a trade association representing independent insurance agents for about a year. So that's basically the non-Allstate, non-State Farm kind of insurance agent world. And then before that, I worked in politics for quite some time. So I was at the White House, worked on presidential campaign, Capitol Hill. So I sort of did a brief tour in my younger years.
So you've seen it a lot, and you've seen both sides. You've been involved with small organizations, you've been involved in government, you've been involved now in large corporations. I got to ask, with your involvement with the 10,000 small businesses, any types of businesses or any type of industry really strike your fancy? Not that you're not going to spend the rest of your years with Goldman Sachs, but if next week you decided to turn in your notice or whatever, and you were going to be your own entrepreneur, I'm kind of curious, out of all the different people that you're talking to and all the participants in your program, I'm kind of curious if you're driving home and I'd say, that's a pretty good business to be in, or that.
Yeah, it's probably not the best business to be in, but they seem the most happy. I would say the business owners that have bakeries, restaurants, they just seem to thrive off of the human element.
Yeah.
And just serving and seeing the smile on their customers' faces every day, and having that routine clientele. Again, those are very tough businesses to run, right? We all know that getting into those businesses is incredibly difficult, but they seem to be the most happy and the most rewarded on a sort of on a routine basis. So despite the fact it's very difficult, I think that's if I were to, quit Goldman Sachs tomorrow, I would love to. I'd love to start I don't know what type of a restaurant or bakery, but something along those lines, probably.
I think you would. Listen. I mean, I don't know you that well. I mean, it's one thing to serve the customer and get joy and passion out of that, and I totally get that. But at some point, you got to make money, right?
True.
And then, if you own one bakery, you're
it's tough. Maybe in retirement, that's what I'll do for fun.
Yeah, it would be a retirement project that you would do that hopefully break even and, keep yourself out there in your old age.
Yeah.
Well, Joe, before I let you go, any final thoughts on, on the economy and the environment that small businesses are dealing with right now that you think that we didn't discuss?
No, I think the other, kind of noteworthy data point from our survey was that we always ask, are you currently hiring full-time or part-time employees? And that number for the first time really took a tick down. So it's only 50% on the dot. Say they are currently hiring full-time, part-time employees. That was down from when we surveyed in April, it was 59. When we surveyed in February, it was 59. So that's a noteworthy decline. But at the same time, when we ask that follow-up question, are you finding it difficult to recruit full-time, part-time, folks for your open positions? The number's the same. So it's like 78%, 79% very consistently say it's really tough to find, despite the fact that the job market is definitely softening a bit. It's still really tough to find qualified candidates. Mm-hmm. So I think that's another, real conundrum, that whether you're talking to a business in the Midwest, the Southeast, the West, it's the same. And it's just incredibly difficult. And so I think, one of the natural, in addition to wage, businesses, I think, are really having a tough time competing on benefits, right? So when they're competing, it's typically not them versus the small business down the street. It's them versus an Amazon, a Walmart, a Google, a big company that obviously has very generous benefits. And the benefit split, I think, is one that's it's just very, very tough for small businesses to compete. And so, I think that's an area, just from a policy making perspective, that there's a lot of room to grow. And then the final area I would say we've been very focused on is the Small Business Administration has not been reauthorized by Congress since 2000, right? So it's now been, a little over 23 years since that agency's been sort of fully looked at by Congress. And so that's kind of our big legislative push this year and into next year is to have Congress do that for the first time in, well over 2 decades. And we're starting to make we've seen some real progress on the Senate side, which is great. But there's still a ways to go, but we're hopeful that can get done, in the next 13 months or so before the end of next year.
I'm a fan of the SBA, but there is a lot of room for improvement. And sometimes I feel like they get misdirected in some of their activities that could be better used to serve small businesses. So I'm glad to see that push. I think that's really important.
Yeah, and it has nothing to do. It's not that, by no means is it their fault. It's it's Congress's duty, and they've just neglected it.
It needs to be done. It definitely needs to be done. And it's interesting. Another point on your employment. I noticed the same thing with my clients as well. I mean, I know the government reported last month there's still like a record number of job openings that are out there. I don't know if you see the same, but I see in my clients that they have openings, but it's not as if they're vigorously going after those jobs. Like we could really use an extra customer service person here, but until we find that right person, it's not like we're in dire need. Yeah.
Yeah. No, I think that's right.
So I'm seeing a lot of that. And listen, my best clients, when they compete with larger companies, I mean, everybody's got a little bit of entrepreneurial in them, and working for a small business, it does give you that little sort of entrepreneurial spirit. And the clients I know that have done really well, they offer profit sharing plans. They offer more flexibility. They, it's a way to liaise with the owner of the business to give advice and help them run. I mean, there's a lot of, sort of intangible benefits to working for a smaller company that I've seen some of my smarter clients have leveraged, and that's helped them to compete against larger companies. So
yeah, that's absolutely right. That's a great point to make.
Joe Wall is the managing director of government affairs at Goldman Sachs. And Joe, you're like the person in charge of the 10,000 small business program, right?
Yeah, so I run the advocacy component, which is called 10,000 Small Businesses Voices, and then a colleague of mine runs the programmatic side of it and works, very closely with the community colleges and all that goes into that, which is a lot. And so yeah, we've had a lot of continuity, which is great, and have a great team running it.
Good. Well, it's a great program, and I want to wish you the best success with it.
Thank you.
I hope you stick with it for a while. You guys are doing really
definitely.
Good work. So thank you, and thank you for
joining. Thank you, Gene. Take care.
Do you have a topic or a guest that you would like to hear on Thrive? Please let us know. Visit payx.me/Thrive Topics and send us your ideas or matters of interest. Also, if your business is looking to simplify your HR, payroll, benefits, or insurance services, see how Paychex can help. Visit the Resource Hub at paychex.com/works. That's WORX. Paychex can help manage those complexities while you focus on all the ways you want your business to thrive. I'm your host, Gene Marks, and thanks for joining us. Till next time, take care.
This podcast is property of Paychex Incorporated, 2023. All rights reserved.